Good morning, and welcome to Eurazeo's Digital Capital Markets Day. I am Pierre Bernardin, Head of Investor Relations, and I will be your host for this event, which should last about an hour and a half. I have the pleasure today to be with Virginie Morgon, CEO of Eurazeo, and Philippe Audouin, our CFO. Good morning, Philippe. Good morning, Virginie.
Good morning, Pierre.
We have prepared two sessions for you today. In a first session, Virginie and Philippe will share with you Eurazeo's achievements, its strategy, and its ambition for the coming years. In the second session, we will dive into our fundraising ambition with Christophe Bavière, Head of Investment Partners, and discuss venture and growth investments with Mathieu Barret and Yann Durusquet, Managing Partners. In order to keep this event tight and lively, we have prepared answers to some of the key questions that you have been asking us over the past few months. I would like, as your voice, the voice of the market, to ask these questions. After each session, we will take questions from the audience. You can type in your questions through the chat box below this video. And without further ado, let's begin with our first session. So Virginie, just to start off, during the last Capital Markets Day in 2018, you presented a new strategy with asset management at its heart. You also established a list of priorities. Could you update our investors today on where we stand on these?
Good morning, everyone. It's my pleasure to welcome you all to Eurazeo Group's 2020 Capital Market Day. It's a big and important day for us. Thank you for all being here. I hope you're all healthy and safe in this difficult and unprecedented time. Thanks for your question, Pierre, and let's dive in. We laid out our key priorities at the end of 2018. Today, we have delivered on each one of those. First, we told you we will develop a successful third-party asset management activity, and we did. We accelerated fundraising, which was up 50% in 2019 compared to 2018 at 2.4 billion euro. We expect 2020 to be again a very strong growth year in fundraising. We also integrated Idinvest, its investment and fundraising teams, and we announced last month that we acquired 100% of its shares 2 years in advance. This was a great decision. It will enable us to simplify even more our organization and make it more efficient. Second, we told you we will position our investment division for future growth and scale. And we did. Our largest investment division, namely Capital, Debt and Growth, have seen a step up in their latest funds with more capital coming from our investment partners, our LPs. We continue to build an attractive track record with our newer investment arms, real assets and brands, which will be ready to raise funds in 2021 and 2022. Finally, we told you we will expand our global reach. We made it right in the US. We now have more than 20 investment professionals in New York. We invested $1.3 billion in 10 great companies. We expanded in Europe. We partnered with MCH on small caps in Spain. We hired new professionals in Germany, in the UK. And we performed several additional investments in Europe. Dork, Adjust, Thought Machine. We certainly have expanded, but more to come in Europe. Finally, we're beginning to break through in Asia. We had the first closing of the China Acceleration Fund with CIC for 400 million euro. We've opened a Seoul office with successful fundraising already. I'm very pleased.
So a lot happening in the past 2 years in the group. How far do you think we are on this transformation path?
Our group has really been transformed. Today, we are a European leading investment manager in private markets with a global reach. We are an investor in high value-added private markets. 70% is private equity, 20% is private debt, 10% real assets. We have 19 billion euro in assets under management, AUM, up 15% since our last Capital Market Day. With 280 people in 10 offices around the world, we are able to operate at the right scale through our 8 dedicated investment teams focused on their markets. Of course, we are really pleased about what we've all achieved, but let's be clear, it is just the beginning. Because what we have built here are the foundation for future growth. There's still a lot ahead of us to accomplish.
Okay, we know that the market is always looking forward. And I think our investors would like to know more about what's to come for Eurazeo. So what's next for Eurazeo?
Well, looking ahead, we have very ambitious targets, both financial and extra financial. So let's start with ESG. I'm very proud to say that O+, our new program for the next 20 years, presented about a month ago, has no equivalent in our industry. We are the first company to aim this high. O+ sets very down-to-earth objectives, extending social welfare coverage to every company in our portfolio, sharing more value, more of the value we create, larger, with more stakeholders, and increasing gender and social equality even further. We're also making a pioneering commitment, which is net zero carbon emission by 2040. And we will embark every company in our portfolio on that path to decarbonization.
Judging by the increasing number of questions that we have from our investors, I guess it's a very key ingredient to attract capital from our shareholders and from limited partners. Then, sorry to be even more down to earth, but when we surveyed our investors and analysts to prepare this event, I guess the most asked question has been, could you give us a 5-year financial trajectory? So you see me coming, Virginie. I think you wanted to share some thoughts on this point today.
Well, I would have been surprised if that question had not been raised. So let's start by the beginning. We've reached a first milestone in, as of September 2020 with 19 billion euro of assets under management. So looking forward, what do we see? We see a trajectory to double our assets under management in the medium term, say 5 years, maybe 7, depending on market condition and cycles. The 4 key drivers to get us there, in my opinion, are a positive market outlook, our fundraising ability and momentum, the scaling of our investment division, and the optimization of the way we use our balance sheet. We know we can achieve this ambition in the same way we just completed our transformation over the last few years, because we have established a very strong foundation on which to grow. And which are these? Rich, large, and relevant deal flow, operational excellence and value add, especially in private equity and real assets, digital expertise, entrepreneurial spirit in the organization, infusing the organization, values and responsibility, and most of all, a strong set of talents executing the strategy. We are going for growth like this because we have one overriding objective, which is create value for our shareholders through the combination of that growing, recurring, long-term revenue streams, thanks to the support, the trust of an increasing number of private investors, and also stronger capital gains linked to bigger, better, and more international deal flow. We have the firm intention to increase the dividend in the next years and to increase shareholder remuneration.
You just mentioned one external factor and three factors that are, let's say, more in your hand. First, do you still see a strong tailwind from the market?
Today really is an excellent time to be a private equity player if you have the expertise, the know-how, and the track record. That's because right now we are at a remarkable crossroads, which I would like to highlight, touch upon. On the one side, there's significant demand for capital from companies of all shapes and sizes looking to expand, be they family businesses, startups, tech firms, or private companies. And to meet that demand, there's a growing influx of capital from institutional investors looking for the sorts of yields and great returns that the private equity industry has constantly delivered over the last 20 years. So this is really our moment. We are here to serve our clients' needs for higher returns in a zero-yield environment, which is here to stay. And in that volatile landscape, especially public markets, private equity is really playing that strong force of a stabilizer. During this health crisis, we've shown that we've built resilient companies and we did not over-rely on that. My conviction, you'll see that, is that Europe will pass a new threshold in terms of fundraising this year. Look at where we are. Year to date, private capital is already up 20% for the European markets. And yet, the main LP segments are still under-allocated on private capital. So we see all sorts of investors continuing to allocate more capital to private markets. That includes insurance companies, sovereign funds, pension funds, and wealth managers.
With such a healthy market, I think our investors would like to know how fundraising is doing for Eurazeo at the moment, and if we are looking at a significant increase in this fundraising going forward.
Well, to double our AUM, for sure, as a trajectory, we have to, increase the pace. We started with a record amount in new funds in 2019 with 2.4 billion euro. That was a huge jump compared to 17-18. That was up 50%. We expect 2020 to be another very strong year, despite a high base in 2019 and the slowdown effect of the COVID crisis. So our fundraising is expected to reach another very strong year, maybe record year in 2020. We have several flagship and tailor-made funds on the road. In particular, Eurazeo Growth 3, our French-Chinese funds, our private debt, number 5, and a continued momentum in several funds across different products. For 2021-2022, looking ahead, we will be raising our ambition with 10 flagship funds, with high ambition and numerous bespoke funds on the road. We are now prepared to raise between 3 and 4 billion per year in the next coming years.
One last question maybe on fundraising that would be interesting for our shareholders. How do you grow your LP base to get to these 3 to 4 billion per annum?
Our strategic plan is to extend our leadership in France, expand in Europe, Northern Europe, Southern Europe, build a franchise in the US, and sign key partnership in Asia. Accelerating the acquisition of the remaining 30% of ID Invest this year has allowed us to simplify and strengthen the organization and to invest ahead of the curve as one team. Christophe Bavière, who's been appointed head of the group investment partners, will tell you more in a few minutes.
I am turning to you now, Philippe. How this accelerated growth of fundraising will translate into numbers?
Well, the headline number to emphasize is the accelerated pace of fundraising, which has resulted in management fees rising 20% per annum over the last 4 years. This year, 2020, we expect management fees in excess of 240 million euros. Let me add that these revenues are highly recurring and predictable. 98% of our funds are closed-end funds, secured for their full duration, which is usually 6 to 10 years, depending on the asset class, with potential extensions. Furthermore, we're strongly positioned on high-value added products. Private equity represents more than 70% of our AUM and generate high management fees, leading to an industry-high average management fee rate of 1.4%. Of course, what matters is how this top line translates into earnings. Over the last few years, our fee-related earnings, or FRE margin, has grown to reach an expected around 28% in 2020, up from 25% in 2017. This performance has been achieved as we continue to invest in our future by building up our platform. So, for example, we've grown our staff by 10% per annum over the period, bringing us up to 280 employees today. We've hired top investment teams, grown our fundraising and LP relations team, and increased our corporate support team.
And what's your next target?
Going forward, in the medium term, we're aiming to reach an FRE margin between 35 and 40%. That will put us in line with the benchmark in our industry for players with mainly majority private equity investments. The key to get there is growth in our fee-paying AUM. The current momentum on fundraising and the scaling of funds will further enhance our operational leverage. In the same way, our seed capital will increase our profitability when we raise third-party money alongside our balance sheet money, like in Eurazeo Real Assets or Eurazeo Bonds, probably in 2021 or 2022. So as you can see, some very tangible targets and a clear pathway to get there. On top of that, the expected acceleration of our exits will trigger additional performance fees.
Thank you, Philippe. So if I understand correctly, we expect growing revenues and an improving margin going forward. Back to you, Virginie. These targets are clearly ambitious. How do you make sure that you have the right talents, the right funds to attract and deploy this capital?
We cover the whole spectrum of the private markets, large buyouts, small buyouts, growth, venture. And we're very pleased to announce today that by the beginning of 2021, a highly talented team of infrastructure talents will join us to build that segment that we didn't have yet. So you see private equity is at our very, very core. Our challenge is now to scale our division in order to have many more funds up to €1 billion, beyond €1 billion, thereby enabling large LPs to invest in us, their trust and their wealth. We have 6 flagships already over $1 billion, or with the potential to reach that billion. We are in the market now, or in the next 2 years, for new vintages. For all these flagships, we are ambitioning to grow 2-fold, 3-fold, the third-party money on the back of a standout performance amongst our peers. The idea is to have a step change in the size of successor funds. We can take a few examples. I'm very happy to share the good news on our first close on growth, over $500 million, including 150 from our balance sheet, with a final target of above €1 billion, which we should reach early 2021. Small buyouts will be soon on the road. For the first time, a European scope. We target for this one twice more third-party capital than the last time. Another example, the next vintage for our transatlantic large buyout division, end of 2022, we'll have a step change of third-party money to reach €1 billion, 50% increase in third-party capital out of a target of 3.5. Turning to our division with already mainly third-party capital, we there also have the ambition to accelerate. The next vintages of venture will roughly double in size, given significant demand in the market and our leadership in Europe. There's a huge upside in scaling our current division. We have developed a seed, accelerate and scale strategy which has proven itself over time. The perfect example is obviously Eurazeo Growth. So what does it take? It takes a vision, it takes a team, determination, the best deal flow for a quality portfolio, and to be honest, a bit of luck with the timing. It's now time to apply this recipe to Eurazeo real assets and Eurazeo brands. We have seeded with our balance sheets these two divisions which have performed very well in the last 2 years and will be able to raise third-party capital very soon. So let's discuss a little bit real asset first. We have strong track records, private clinics, solar plants, real estate. Renaud Abercorn and his team have really built an outstanding franchise in France and in Europe in that competency. What about brands? They have a high-quality portfolio of logos, 7 deals already signed in the US, and the first one in Europe announced last week, Axel Arigato. We will target new vintages funds for those categories in 21 and 22, with third-party capital representing 30 to 40% of the total.
Now turning to investments, it looks like the market is reaching new highs everywhere all the time. Investors often wonder, where do you still find attractive investment opportunities? What type of companies are you looking for?
With COVID, the markets have even more polarized today. The winners are achieving really high valuation on the back of strong growth, outstanding growth, shall I say, while some sectors are, of course, being, impacted structurally and are being sort of left out from investment. We, over the last few years, have pivoted and redeployed for several years now, focusing on the sectors and companies that best address the challenges for the future. Let's start with tech companies. They are, of course, one example. They account for 40% of our private equity AUM. It's 5 billion invested in 220 companies and nearly 40% of the opportunities that we are looking at. The COVID crisis is fast forwarding the e-commerce explosion, the consumer digital adoption, Internet of Things, automation, software, in-payment, you name it. Same trends in healthcare, highlighting the boom of biotech, diagnostics, devices, relocalization of production, as well as a very rapid digitalization of the processes through telemedicine or clinical trial, as an example. This has opened up many new opportunities for us as a very experienced firm. We have invested $1.2 billion in healthcare over the last 15 years in more than 50 companies. So our investment activity this year, it's $1.7 billion over the last 9 months. Our recent investment in private equity plays to our strengths. 35% of our investment this year was in the tech sector, especially in software across different divisions in the latest quarter, Q3. Easy Vista in small buyout, Thought Machine in growth, and Questel in large buyouts. We've also invested €300 million year-to-date in venture deals. Brands done 3 deals this year, including our first in Europe. They're growing their revenues, they're digital, they're uprising, lifestyle premium, great potential.
Thank you, Virginie. Philippe, investors are always eager to know more about the portfolio and how it's holding up. Could you update our investors on how the portfolio has been faring in Q3 and if it's still resilient?
That is the right word, Pierre, resilient. And that's primarily because we have managed to build such a diversified portfolio. You remember, back in March when the pandemic hit and we went into the lockdown, we were concerned to determine how exposed we were and our group was. So what we did then was break down our portfolio into 4 categories according to potential impact and subsequent consequences of the lockdown. With time, that 4-way split has turned out to be really quite accurate. Let's take the categories one by one. The first and largest category, with more than 50% of our net asset value, is the most resilient. These are companies with recurring revenue-based, unaffected or almost unaffected by the pandemic, like Iberchem in flavor and fragrance, C2S in the healthcare sector, or like Elemica in tech, just to name a few examples. In the second and third category, which collectively represent 40% of our net asset value, you will find companies that have been indirectly or directly impacted by restriction measures and social distancing. So, for example, in the second category, we have our Summit Hospitality Schools, CPK, or Peter Surgical in healthcare, all of which have only felt indirect impact. And in the third category, where the impact has been direct, but with a rapid recovery expected, I point as example companies like Desange Air Salons or Emerige Real Estate and Construction. If you take those 3 categories together, you will find a total of 90%, slightly more than 90% of our net asset value. These are all companies that have collectively demonstrated resilience during the lockdown and quickly recovered back to pre-crisis level once the lockdown was lifted. And Q3 figures have again confirmed their strengths. In addition, I'd like to point out that our growth portfolio, which represents 17% of our net asset value, and which is not consolidated and thus not included in the revenue figure here, continue to benefit from the crisis. They have seen revenue growth of close to 60% on average over the first 9 months. Many of these companies have even reported figures above their initial budget.
And what about the fourth category, the most impacted one?
The fourth category, just 9% of our net asset value, gathers the travel and leisure companies most immediately affected by the pandemic. But even here, we've been pleased to see that these companies had a slightly better summer than expected. However, we know that this category will continue to be impacted by the COVID crisis, and we have been very careful to reflect this cautiously in our net asset value at the end of June.
Regarding the COVID impact, do you think the group is well prepared for the second wave?
Well, the most important thing here is the health and safety of our staff and clients. We are fully mobilized to protect them, and we continue to monitor the situation very closely. That being said, we are cautiously confident. Our current assessment is that the second wave should have a more limited impact on our portfolio. The risk of another downturn has already been largely priced in our net asset value with cautious assumptions. So today, we believe we have more good news than bad news to expect going forward.
And why is that?
Several reasons. First, the lockdown measures are less stringent for the moment, and several sectors that were totally halted in the spring have been allowed to continue their business in autumn. Second, we've learned a lot from the first wave. Cash management, operational improvement, digital pivot, very important, and cost optimization. In fact, some of our portfolio companies are benefiting from all the measures implemented at the beginning of pandemic. I can give you some examples. Companies like Bandir or Q-Mixer from Eurazeo Brands and Linvauge from Eurazeo SMEs, all 3 in consumer brands, gains several years by accelerating their digitalization process in e-commerce sales. And the latest estimate for where those companies will land for 2020 are in line with our pre-summer forecast. Third, most of our portfolio companies have also reasonable liquidity levels thanks to prudent debt level before crisis and the work that has been done during the first wave. We can confirm today that the total need for fresh equity injections to support our portfolio companies, including those already made, will remain below 2% of our net asset value as announced in H1. And finally, remember that we have a strong financial situation, no structural debt at Eurazeo level, and a confirmed credit line of 1.5 billion euro, together with 4 billion euro of dry powder. That leaves us ample headroom to continue the development of the group and seize new opportunity as they arise.
One last question on my side. We have talked about investments before. What about the outlook for exits?
The outlook for exit is very positive. Strong asset rotation is going to be a standout feature for Eurazeo over the next few years. Our portfolio is mature, with more than 70% of the portfolio over 3 years old at Eurazeo. That's an all-time high for us, and it points the way to an ambitious exit program by the end of this year and in 2021 and 2022. This accelerated exit program will have a positive outcome for our shareholders. First, it will enable us to externalize hidden value in our portfolio in the coming years. Our valuation methodology is prudent. We usually value our companies based on last 12 months' result for net asset value calculation, except for companies in category 3, where we have used an average LTM, NTM stands for next 12 months, to better reflect the notion of maintainable earnings. Upon exit, market practice generally calculates the value of an asset based on forward-looking figures. So we effectively get to take into account 1 full extra year, in average, of growth of the company that we sell. Sometimes, a higher multiple can also trigger hidden value at exit. In line with market practice, we value based on a benchmark average multiple. But when we exit, we don't try to exit based on average multiple. We try to find buyers that, for any specific reason, would be ready to pay a more attractive multiple. Forward-looking figures, combined with a better multiple, should help us to drive the valuation upward. So an increase in our asset rotation will likely support the growth of our net asset value. Second point, the stronger dynamism in our portfolio rotation should also trigger future reduction of the share price discount. And this combination of an increased NAV on one side and a reduction of the discount on the other side should be of direct benefit to our shareholders. So in answer to your question, the outlook for exit is very positive and should allow us to unlock significant value in our portfolio.
Thank you very much. I think our time is up, so thank you for your answers. We have had a lot of new information today. If I sum up, doubling AUM over 5 years, up to 7, depending on environment. Acceleration of fundraising already in 2020 and more to come. This should translate into more revenues and improving FRE margin, which could catch up with the benchmark. And regarding the portfolio, it's resilient, of high quality, and we should expect significant exits soon to crystallize value. So that's all for our prepared questions, and I will now open the floor for questions from the audience. So we are now back for the Q&A session. Remember that you can type in your questions below the video of the live stream. We begin with the first question. Does your path of doubling your AUM in the midterm include some M&A?
Well, thank you for that question. So that trajectory that we are highlighting, 5 years to 7 years, depending on market condition, is an organic trajectory based on what we have today in terms of team and talent, our potential to grow our flagship, and also to accelerate the growth of our bespoke funds. You've heard that we should start building our infrastructure expertise starting in 2021. But that ambition doesn't include per se some M&A. However, of course, we are always on the look. We're open to opportunistic M&A. A number of discussions, have taken place. Number of discussions will continue to take place. I think we have a reputation of being, able, because we've proven it, to identify a great team, integrate in a simple manner those teams in the organization, and then accelerate the growth of our group. So organic is the answer, but M&A opportunistically could be welcome as well.
Thank you, Virginie. I'll take another question. You talked about shareholder remuneration. Are you going to resume your dividend in 2021? Philippe, maybe?
It's our firm intention to resume distributing a regularly growing dividend. We have stopped this year for the obvious reason that you know. But Eurazeo has a large distributable reserve. We have a sound cash situation. And going forward, the increase in recurring revenues will enable us also to support the dividend distribution. So, of course, that will be decided in due time. But yes, it is our intention to resume a regularly growing dividend in the future.
Okay, I see there is another question on shareholder remuneration about the share buyback program given the current discount to NAV.
Well, as most of you know, we have been very active in terms of share buyback, which is a way to have a relative action for the benefit of our shareholders. We had stopped our share buyback program to comply with official recommendations earlier this year. Given the large discount to NAV that we have been seeing recently, we could be opportunistic and resume buying back some shares. No decision is taken at the moment, but we are monitoring the situation.
Okay, thank you, Philippe. We have a question from Christophe Greulich from Berenberg. The planned divestment program should result in a substantial cash proceed. What is your priority for cash allocation? And is talking about either new balance sheet investments or more the inorganic growth in asset management that you were talking about, Virginie.
Well, thanks for the question. I think I hope I partly answered that question initially about being opportunistic in terms of M&A. We certainly are using the balance sheet to anchor a number of our flagship funds. Take the example of Eurazeo Growth. If we're reaching our target of now $1 billion, the balance sheet will be investing up to 250 million. So this is anchoring the fund. Also continuing to seed, accelerate and scale. And infra will be typically a seed, accelerate and scale strategy. Probably opening up to third-party money faster than with brands or real assets. GP, I know we have a minority stake in MCH, minority stake in Rhône. 2021 will be an important year from that standpoint to see, how further we want to go in our cooperation with our friends, both in the Iberian Peninsula and in the US.
Thank you, Virginie. We have another question. Do you see some pressure coming on fees since many new players are now entering the market and that some of the large limited partners are building some of their own internal team, even if it's not always as successful, states the question.
Well, I'm happy to say, I'm being, prudent, but I'm happy to say that as we speak, we don't see that sort of pressure on fees. Philippe reminded the blend of our fee at the group level, which is 1.4. We certainly have private equity a blend of 1.8 to 2% on the fund that we are managing on behalf of our clients. What you might say is that when you have a special relationship, through a dedicated mandate or very significant partnership that you have an intention to build long-term for the future with significant volumes, then of course you may have different terms and remuneration for those type of partnership, fully disclosed, fully transparent in the funds. But that's a very different sort of answer to your question. It's not about pressure, it's about recognizing the value of a long-term partnership. So that's how I would say we see the market. I think the pressure is not about the fees. It's about the greatest deal flow, the best teams and talent, and the ability to show to your clients a recurring performance over time with a great investment strategy.
Thank you, Virginie. Again, if you have further questions, just type them in the video, below the video. Another question, on your Q3 figures, you mentioned Kurma partners. Could you be more specific on this company and your partnership?
Well, we've not much communicated about Kurma because there's so many things happening in the group. Kurma has been invested and developed hand in hand by Idinvest. And we certainly have now built upon that partnership and cooperation with the founders of Kurma. So Kurma is a dedicated team investing in biotech, phase 1, phase 2, and tomorrow phase 3, and also diagnostic. Great returns, great market branding, strong deal flow. So we're looking ahead and looking forward further collaboration with our friends at Kurma.
Thank you, Virginie. It appears that we have no further question for the moment. So thank you again, Philippe. Thank you, Virginie. Virginie, I think you come back for the conclusion. Absolutely. After the second session. So thank you very much. And we begin the second session.
See you then.
We're back for our second session. We now welcome Christophe Bavière, the co-founder of Idinvest, who was recently appointed head of Eurazeo Group's investment partners. The investment partners department, through capital raising, will be key to succeed in our objectives announced by Virginie earlier. Good morning, Christophe.
Good morning, Pierre.
When we prepared this session, you told me that your goal is to really put the limited partners, our clients, at the center of a virtuous cycle. Could you tell us a bit more about this?
Of course, Pierre. Eurazeo's success is directly linked to our ability to deliver a higher level of service and performance to our limited partners. Year after year, we, as a group, are becoming even more client-centric. The starting point of this is the client relationship team. This team has frequent contacts with our limited partners. They are building a long-term relationship based on closeness and trust. Thanks to this client's knowledge, we can offer the right product to the right clients with an optimal mix of returns, risk, and liquidity adapted to their requirements and needs. In the end, the performance of our funds and our ability to meet our clients' expectations reinforce the trust and the engagement of our limited partners. And this is leading to higher reinvestments, to cross-selling, and for some of our key clients, to long-term dedicated mandates. Scaling up activities is necessary. This allows us to grow our internal capabilities by attracting the very best talents to manage funds, by enlarging our local presence worldwide, and by being competitive in the market for the companies we sponsor. The fees generated allow us to reinvest in better resources to cover investments. So Pierre, this is what we call the virtuous circle that will help us grow our asset under management in the medium term, as Virginie previously mentioned.
So it all starts with a great fundraising and LP relation team. Could you tell us a bit more about it?
Yes, we are very proud of it. They are a team of roughly 30 people managing LP relations. They are organized by region, servicing all our investment divisions for each part of the world. As mentioned previously, our limited partners are the group's top priority. To serve them better, we are investing significantly in our internal resources with an ambitious hiring program. We already have a critical mass in France, our historic market. We are now in the process of hiring in Europe as well as in Asia. We are also building an investment partners team in the US, a region, Pierre, where we need to reinforce our visibility.
How do you explain the current momentum in fundraising and how do you expect to carry it forward?
That's a key point. We are building on our success in France, where our leadership is undeniable. It has enabled us to build our credibility and our track record. Even if our penetration rate in France is high, we still see a lot of potential. The market is growing, and we are developing new funds to answer our limited partners' need. Our goal is ambitious. We are now growing throughout Europe as well as internationally. A quick illustration of the result of this strategy in 2020. We recorded this year the largest commitment ever received in one of our vehicles, 340 million euros. This came from a well-known and very demanding international insurance company. To keep expanding internationally, we benefit from 10 offices around the world. These offices have dedicated resources for the fundraising team. This is helping us to scale up our international development and to increase our physical proximity with clients. Among our recent successes in Asia, I would like to highlight the integration in 2020 of 2 new investors from China in our LP base. This is quite an achievement for a European investment firm. The first one is China's largest sovereign fund, CIC, China Investment Corporation. And the other one is a prestigious listed Chinese corporation in the agri-food sector. The US remains the key country in our growth ambition, and we are dedicating more resources there. We are currently looking for a very senior position, fully dedicated to servicing American clients. It will obviously be based in our New York office. So as you can see, it's a very exciting time for our amazing team.
Thank you, Christophe. There is a lot of talks in the private equity industry about increasing investments from private individuals. We see that in the US and also here in Europe. And you talked earlier about your dedicated team on wealth management. So could you elaborate on the opportunity for Eurazeo there is in wealth management?
I'm glad you asked, because wealth management is indeed key in our fundraising strategy. On wealth management, we can easily say that Eurazeo is by far the French leader for private equity, thanks to a long history and a dedicated, seasoned team. We have signed blue-chip partnerships with prestigious banks, insurance companies, and independent wealth managers. For us, it's a very attractive market with healthy margins. As of today, more than 80,000 private clients have invested in our products. We are currently marketing 6 vehicles, and we should be collecting more than 250 million euros in wealth for this year alone. We strongly believe we are only on the verge of the trend. The legal framework is loosening up. Regulators and governments begin to see private equity and private debt as more mature asset classes, and also as a way to better use savings to contribute to economic growth. Now that our credibility is well established in France, we are progressively running out in Europe, signing with new partners. And to accelerate in this direction, we are today one of the very few management companies for which a fund addressing private clients has received the ELTIF visa, a difficult acronym, but this is a European passport giving us the opportunity to market this fund throughout Europe. Our midterm ambition is to offer private individuals access to each of our products in France and throughout Europe. So Pierre, this is how we are moving from being an established French leader to becoming a European wealth leader.
Again, when we prepared this talk, you also talked about corporate partnerships, blue-chip partnerships, and how unique Eurazeo was in this respect. Why is that?
Let me explain. Another of Eurazeo's strengths is the ability to partner with corporate blue chips. To my knowledge, no other investment firm in Europe has focused as much as us on industrial partners. Over time, we've built robust partnership with international corporate leaders in various sectors: energy, insurance, mobility, technology, advertising, among others. These partnerships have a unique positive impact on our ecosystem. For our investment teams, having access to these partners is a great help, both during the investment process to convince managers and entrepreneurs of our value proposition, and during the holding period by giving these portfolio companies access to incredible opportunities to develop business.
Finally, could you talk a little bit more about the current program of funds and the ones that are going to be on the road soon?
Things are changing fast here. We have two kinds of funds. On one hand, we have what we call flagship funds. These funds have the potential to raise more than €1 billion. They are large and scalable. They can be very competitive in their respective markets and attract the very best talents. They also have a wide appeal for limited partners who can invest large tickets in large vehicles. These funds can undoubtedly attract new, large, international, limited partners. On the other hand, we continue to develop tailor-made and more niche vehicles. They can range from €50 million up to €1 billion, and their goal is to generate greater proximity with our client and higher engagement over time. Obviously, each one of our funds benefits from our staple ESG commitment. This is a historical competitive advantage in which we keep innovating and we keep dedicating resources to better serve increasing requirements from investors. Here is an illustration of our fundraising pipeline, with two new flagships raising their next vintage. 2021 promises to be another rather busy year. In the meantime, we continue to develop tailor-made funds, including wealth management vehicles. This gives me good confidence that the group's fundraising for 2021 and 2022 should be even higher than the most recent period. To conclude, what I really want everyone watching to remember is that LPs are at the center of our attention. We keep innovating to bring them a comprehensive offer to scale up our funds, allowing us to have more resources to allocate and confirm our position as the European leader.
Thank you very much, Christophe. You will be back with us for the Q&A at the end of this session.
Perfect.
Thank you again.
Thank you, Pierre.
For our last presentation on venture and growth, I now have the pleasure to welcome Mathieu Barret and Yann Durusquet, who are partners in charge of venture and growth at Eurazeo. Good morning, Mathieu, and good morning, Yann.
Good morning, Pierre.
With the COVID crisis, the tech sector has clearly been in the spotlight, with the Nasdaq up massively year to date, many high-profile IPOs, and many big rounds of financing for venture and growth companies, some of which you've been actually part of. Some investors, however, wonder if we are not in a bubble. So, Mathieu, Yann, what is your take on the current environment?
Yes, Pierre. The world around us is full of uncertainty, geopolitical, economic, and social uncertainty. But even so, we do have some certitude, notably that the world is getting digitalized at a rapid pace. We are all changing the way we consume, the way we work, the way we interact, and the way we take care of our health. So given this reality, companies have no choice but to adapt in a number of ways, by increasing the speed of their decision-making, by improving their productivity, by enhancing the way they use technology and data, and lastly, by accelerating the scope and scale of innovation. It is therefore not really surprising that the most solid digital assets are on fire. They are outperforming the stock market. The Nasdaq has almost never seen the kind of gains that it has made this past 12 months. Not surprisingly, the big winners are in the e-commerce and marketplace sectors, followed by online gaming.
No, it's not surprising, Mathieu, because all of this is part of a huge wave. It's not just a blip caused by COVID. Today, the top market caps in the US are all tech companies. You may have seen that Exxon has been recently taken out of the Dow Jones and replaced by Salesforce. This is a very telling example. So I believe we are just beginning to see the impact of this trend in Europe. And we know that the tech companies we're investing in today are going to be, in 10 years, in the CAC 40, or in the DAX 30, or in the FTSE 100. So for the VC and growth markets, this long-term trend has brought more capital from more investors. Investment in our segment have been multiplied by 6 in the past 10 years. Europe has been growing fast, but it's still only 1/4 of the US market. And obviously, we believe it's going to play catch-up.
Could you tell us a bit more about Eurazeo's credential on these segments and why we are well positioned to benefit from these trends that you just described?
Yes, I mean, Eurazeo is one of the major players in Europe, especially in continental Europe. We have been investing in technology for the last 20 years and have 3.7 billion euros of assets under management, representing 40% of the group's private equity AUM. Our team of 20 professionals is investing across Europe and Asia with a core focus on digital, healthcare, and all green technologies with strong performance, as Yann will explain.
Yes, thank you, Mathieu. So as you can see, we have invested in 255 companies over the past 20 years. We've done 85 exits, and we participated in 22 IPOs, both in Europe and in the US. So we are one of the most experienced and active tech investors in Europe, as also illustrated by all the awards received from our ecosystem. And we have shown a strong performance over time, with a return of 18% on average across all our realized investments.
And where do you see opportunities in the market today? Where do you invest?
Well, we invest in early stages of the company life, our sweet spot being when there is a product market fit and some sales traction. We like teams and business models that can scale fast and become category leaders. Our know lies in helping to recruit great teams and help to expand internationally. We also keep investing at further stages of development in the most successful startups of the portfolio. We were, for example, one of the first investors in Criteo and were still a leading shareholder when it IPO'd. Also, entrepreneurs like to have deep pocket investors on which they can rely over the growth of their company. For example, we have kept investing over the various financing rounds of Vestiaire Collective, including growth stages, as Jan will put in a minute. We are now one of the leading investors of that very successful company. We invest in digital technology across all sectors, including fintech, marketplaces, software as a service, which is software in the cloud, consumer internet, digital health. Actually, our role is to anticipate the next growth trends and disruptions in the industry. We also have identified great investment opportunities in the smart city sector, which includes new means of mobility, energy savings, logistics, real estate technology. We have therefore set up a dedicated fund for that industry.
Yes, and I believe we do have a unique positioning along the whole continuum, from the early stage segments, just described by Mathieu, to growth stage investment. So in growth, we are investing in already well-established category leaders with hyper growth rates in deep markets. And we choose to invest in highly profitable business models at scale. At the time of our investment, some of them might not be profitable yet because they are still investing in their development. So with these growth rounds, we are financing their international development and also trying to seize the build-ups opportunities as these companies are also market consolidators. So overall, we are supporting many companies that are disrupting their sectors and have built over time what we believe is one of the best portfolio in this segment, with companies like Criteo, Doctolib, Farfetch, Backmarket, Talent, or Mano Mano. So as you mentioned earlier, Mathieu, COVID has actually been more a tailwind than a headwind for us. So in H1, we have indeed seen a strong momentum of fundraisings, both in venture and in growth. Like Content Square, for instance, which raised almost $200 million in March, just a few days after one of the biggest stock market crash in the history. Or Withings, which is another testimony of the strong attractiveness of digital health.
Thank you, Jan. I think it's always useful for investors to have examples of sectors that are being disrupted or for companies that you are investing in. Mathieu, I think you wanted to talk about the agri-food tech sector.
Sure. There are trends that Jan mentioned before, like fintech, which are already well established, but with still strong investment opportunities. And there are new trends. One of them is the agriculture food technology, which targets how technology will change the way we produce food, what we eat, and the way we consume. 18 billion euros were invested in the sector worldwide in 2019, and close to 10 billion euros have already been invested in the first half of 2020. Let me give you a few examples. Look at the incredible success of companies like Beyond Meat in the US, that produces artificial meat from plants to reduce animal consumption, especially beef consumption, as we all know that cattle breeding is responsible for a great part of greenhouse gases emissions worldwide. In that very specific field, we have done lately one investment in the UK called This, that produces chicken nuggets and bacon from plants. An ancillary trend is the production of alternative proteins to contribute to the major challenges of our time, feeding the world's population, preserving resources and biodiversity, while fighting global warming. Insect, one of our latest investments in the field, is a world leader in the breeding of insects and their transformation into premium ingredients for animal and plant nutrition. Insect has raised more than $400 million and recruited 130 employees so far. Another trend is urban agriculture that uses technology to bring the producer closer to the consumer. The United Nations predicts that by 2030, 20% of products consumed worldwide will come from urban farming, compared to just 5% today. Agricool in France or Infarm in Germany have developed new, sustainable, local methods of growing food in cities. And finally, the way we consume has changed as well. And food delivery platforms are getting more and more adopted globally. Restaurant delivery has grown 20% in the last 5 years and could represent up to 40% of restaurant sales by 2023. This trend has given birth to the new concept of cloud kitchens, which are kitchens dedicated to meal delivery only. Glovo, in which we invested 3 years ago, is riding that food delivery trend. Growing over 100% year on year, Glovo is within the 2 leading players in around 15 countries worldwide.
Thank you. Jan, you chose to talk about digital health, obviously one of the most sector on fire at the moment. So could you tell us a bit more about it?
Yes, Pierre, definitely this is one of the hottest markets these days. So overall, we have a strong expertise in healthcare, which represents today 8% of Eurazeo private equity AUM. And I can see many segments that technology is disrupting and boosting at the same time. For example, some companies are using their technology to improve the relationship between practitioners and their patients. You know that we are a key investor in Doctolib, which is a company created in 2013. And Doctolib is really driving this digital health revolution, both in France and Germany. Through its booking and telehealth products, Doctolib addresses a 5 billion euros market and serves more than 40 million patients. Many companies are also working on prevention, launching devices and apps to improve overall wellness. For example, we recently invested in Withings. So Withings aims at bridging the gap between consumer tech and healthcare by providing medical-grade data that can be shared with healthcare professionals to deliver better and more personalized care. Today, Withings employs more than 200 employees and sees a lot of traction, with revenue growing at 50% during the lockdown period. Finally, we see a lot of disruption in the consumption of drugs. So we invested, for example, in LifeBeat, which is a genomic data platform able to process and visualize genomic data on the one hand, and to perform AI analysis on this data on the other hand. As you can imagine, LifeBeat value has dramatically increased post-COVID because its platform can facilitate any genomics-related work to develop a vaccine.
Thank you, Jan. Thank you, Mathieu. It's great to see so many initiatives in these sectors. I will now ask Christophe Bavière to join us back for another Q&A session. So second Q&A session. We have a first question, maybe for you, Christophe. What is the key success factor to sign new limited partners?
I'm afraid there is no secret here. Performance is key. Investors look at how investment firms secure robust and regular performance. To secure this performance at Eurazeo, we want to be the preferred partner of potential investment. The very best investment. They have the choice to choose their equity sponsor. And we want to be selected, to be perceived as the go-to investment firm. And this is why we invest more and more resources to coach them, to help them grow internationally.
Thank you, Christophe. Second question, more for Jan and Mathieu. What is the company in your portfolio for which you are the most excited about at the moment?
Actually, we have one which is doing very well called Onfido, based in London, that has just raised $100 million with a big US PE firm, private equity firm. And Onfido is in the digital identity space. We know that in the future, more and more transactions will be digital, and making sure that the people who do those transactions are the one they claim to be is very important. So Onfido has developed a technology, a KYC, know your customer technology, using artificial intelligence or deep learning technologies. So you take a picture of your ID, it can be a UK passport or Indian driving license. You take a picture of yourself. They make sure that the two pictures match, that are not fake pictures. They check your ID, make sure it's not a fraud, and they guarantee you that you are the right people doing the transaction. And they do that in a minute, at a very low cost.
Great. Jan, maybe one from you?
So I would say all the consumer internet companies which have experienced a strong increase in their revenue in 2020. But the reason why we're really excited about these companies is that not only the revenue have increased, but also the quality of this revenue have increased. Because this incremental revenue comes from people that come and come again on the website, so repeat buyers. And the conversion rates increase a lot. And these conversion rates increasing translate directly into higher contribution margin. And we believe this is here to stay.
Thank you, Jan. Next question, maybe for Christophe this time. Where in Europe do you see the most fundraising potential in the short term? And is the UK an interesting market for you?
Well, Europe is, without any doubt, a very interesting market. Institutional investors and private individuals still have the potential to grow their asset allocation to private equity and private debt as their approach to this diversification can still be more mature. We concentrate on Germany and also on the Nordics. Of course, UK is an interesting market because investors there are mature. They have a very sophisticated approach to private equity and private debt markets. And also, to a certain extent, we will reinforce our resources based in London. To a certain extent, when you are based in London, you can capture international LPs that still see London as a base to cover Europe.
Thank you, Christophe. Maybe one last question that we have here for the venture and growth part. Where do you source your deal flow?
So I believe we have one of the deepest, or if not the deepest, network in Europe. And we have, of course, built connections over time with all the VC investors. And Mathieu's team is helping us a lot in this respect because they're one of the most active investors on the early stage in Europe. So it allows us to build connections and to build relationships at a very early stage with entrepreneurs. And when these entrepreneurs raise a growth fund, then they know us, we know them, and I think it gives us a really strong competitive edge.
Thank you very much. I think that's it for the questions from the audience. So thank you again, gentlemen, for your presentations, and see you soon. Thank you.
Thank you,
and I will ask just Virginie to come back for her conclusion of this Capital Markets Day.
Well, great job of the team. My message is quite simple. We built all the foundation we need to grow. Each of our investment division is relevant and competitive in their own market. All of them have a growth momentum with bigger next vintages and a better attractiveness for our private investors. Since the full acquisition of IDinvest, we are building up a simple, efficient, and international organization to deploy the strategy and grow our fee-related earnings, FRE. We have a strong competitive advantage through our balance sheet to seed, accelerate, and scale our businesses organically or through opportunistic M&A. Most of all, we've been redeploying our investment for several years now, focusing on the right sectors, as you could see from the presentation of Mathieu and Jan, for the post-COVID world. We are a leading European investment manager with a global reach. We are looking ahead to grow, to perform, and to increase our shareholder remuneration. This is the plan we want to deliver and execute. Thank you very much for your attention today. It was a pleasure. Have a nice day. Thanks.